Hey everyone, welcome to a new live session. My name is Mo. If you are new to my channel, I break down the stock analysis in a comprehensible way so you can understand it, and I help you overcome the scams in the markets and the gurus over there. So today we will be discussing the news tradings and the subject news, because today is gonna be important news dropping. Is called the Fed interest rate decision making, and tomorrow is gonna be the core PCE, and after that personal income, personal spending, non-farm payrolls, and more. So we will be going through all of them and understanding them and how we can use it in different areas also, and how you can trade news. Before that all, we will be going through the live stream to check out if the live stream is working right now. Let me check it out. And we will be watching a YouTube video by my favorite YouTuber. And so let's check if the web stream is working. Click on it. YouTuber. And so it's great. It's working. It's working perfectly, and hopefully the background sound is relaxing for you, as it enhances your capability of getting the whole information and relaxing your mind. The music in the background, if you're wondering why there is music in the background, before every trade I always listen to the music in the background, and today we will be also trading live. So last week, let's repeat what we have done last week. Last week we were looking for lower prices and DXY, the dollar index, but right now we are looking for higher prices to retest the breakout. So we broke out of this higher trends over here. We are overall in a bullish trend, but we broke out in this consolidation phase to the downside. So I'm looking for the downside still over here. And of course, as always, we're gonna have a special guest over here who everyone know him very well, and he gonna break down his view of S&P 500 and where he's here also Bitcoin. So before we go to him or anything, we need to understand where the dollar index right now is staying. We broke out of this consolidation phase to the downside, and this downside I was looking for much lower as S&P 500. It could potentially by December time go higher, and why this is right now is playing perfectly as we have discussed it last time. So dollar index need to go lower for S&P 500 to go higher, and when it is go higher, S&P 500 it goes lower. Why is that? Because the money is going where the money is going, the flow of it. Either we put it into stock, a risky one, or we put it into dollar, which is less riskier, right? And nowadays it's a new trend, which is people are a little bit scared if the concerns are right or not. It is not important for us as a trader. We don't trade the concerns, we don't trade hopes, we don't trade emotions. So we just trade the charts, what is telling us, what the data is, and what this actually data is telling us. We don't care who said that or who is doing what. This is not important for us at all. This is very key important thing when it's coming to news trading, right? There is always the saying goes, buy the rumors, sell the news, and sometimes it's vice versa. It's also true, and lately it's been like this in the last 2 months, 3 months. Buy the rumors, sell the news. It has been like this, but still you need to be very careful when it's coming to this, right? So we will be looking for lower DXY, and right now it's going higher. And when we go to S&P 500, the future of it doesn't matter. Let's go to the 30 minutes and zoom out. The last week trade, we were looking for higher prices, and exactly that happened. We went higher, we entered a trade, and right now I'm waiting for Fed decisions, and the Fed decision is gonna tell us if it's gonna be potential for price higher. Right now I'm looking for a website. I forgot the name of the website. Okay, let me check what was the name of the website where we could see the Fed decision, right? And so let me check. too many information over here. Interest rate by CMC Group and investing.com. Trading interest rate, FOMC meeting, Eurobors. We need to check the Eurobors also. Economic trading, economic. We don't have FOMC prediction. The next FOMC, the world inflation. So first of all, before we go deeper into the macro view, okay, let's check the S&P 500, what it's done. It went up and went down as we have predicted. Right now we're looking for potential higher prices if it happens based on the reaction. So in the hourly time frame, I love to use those volume profiles to see ranges where the majority of trades happens. This is the orange lines is called the value area, is the high or low, and the red line is the point of control, the most traded area, right, in the whole range. It's why it's important for us. We want to see where the interests of people are, right? We want to see where the supply and demands are. We trade the supply and demands. We don't want to have high complicated trading strategies. We just need to understand supply and demands, and that's all what it takes in trading to figure out web psychological pain points of the traders are, of the customers are, and then analyzing it and analyzing the likelihood the price is gonna go there, right? It's very logical, I think, trading. At first when I started, this was very difficult to understand and figure out what's happening, but it's more important. Let's look at the inflation and let's zoom in. So Turkey, Zimbabwe, I heard Zimbabwe was very interesting country for investment right now. Many people looking for African countries for investment, right? Nigeria, a lot of inflation. Ghana, inflation. Okay, Mali, a lot of information. Should be Congo, inflation, 19. Okay, Zimbabwe. Okay, all of them is pretty interesting. So let's check. I think it was Nabia. Okay, let's check Nepal. Okay, a lot of ends we have here. Doesn't matter. So let's go upstairs and check the whole world inflation. Couple of countries which is already known for us. Argentina is pretty high. Venezuela. So my friend of mine is coming from Venezuela and he's traveling right now through Europe, and he's pretty happy to be in Europe. And Turkey has also a lot of inflation. By the way, I speak a little bit Turkish if you didn't know that. A new information for you, and write in the comment section if you also speak Turkish, Arabic, German or English. So write in the comment section so I can know which language next time we should stream. So Iran has also 23. The Israel attacked Egypt, 24, pretty high for Egypt. Lebanon 20, and Syria no data. I think it is almost 100 because I originally come from Syria, right? Russia 18. So basically said world inflation, the eastern countries has been lagging, and also the couple of African countries and also South America, and it is basically said the third world beside the Western, which is surprising, right, for me. Who is Hungary 6, and how much Austria 2? Okay, very interesting. Austria right now at the 2 rate. So the housing market has also quadrupled, which is crazy because right now, despite even the inflation the interest rate is a little bit lower, still you cannot afford houses in Austria, which is crazy, right? So it's been going down, and I think America is the only States a country which has not played around, right? It should interest rate go lower in America too. So banks balance sheets and so on, it's going lower, 2.15. So we said what's economically coming. Okay, 96% saying it is gonna be, the target rate probability is gonna be the same for July 30th. Okay, so it's nothing gonna be changing, which is surprising when we watch the whole European countries, right? Where it's gone, the whole European countries has decreased the interest rates, including UK, right? UK by 4.25 is still high. Canada 2.5, 2.75 is still pretty much high. So everything below 3, I would say, is good for the economy. Of course, you need also to take into consideration what's the difference between the two central banks is the European Central Bank and the Federal Reserve. The Fed looks at unemployment rate and also the inflation to determine its reaction. The European Central Bank looks only into inflation. How big is the inflation in Europe in general and in its specific German countries, right? It could be, for example, other countries in Europe such as France or something, as the inflation higher, but in other major countries in the Europe inflation lower, right? Which is less likely because both of them are using the currency euro. But when we look at Hungary, which is using the Hungarian currency, and the Czech Republic using the krone, both of them have different interest rates, right? So Germany 2.5 at 2.15, and Austria also, Italy also. So every currency determining the decision of the Central European Bank, right? The ECB. Why so? Because all those countries using euro. All those countries using euro. So Fed decision, it should be remain the same. Okay, still very interesting. So accept everything what the chat is saying. Here is investing.com saying the same thing. Okay, every one of them saying the same thing. So pretty much. Here is the Euribor is decreasing, and let's say day by day. Okay, is this rate months? This is at 2 almost a year, 2.448, which is like those rates are showcasing how much interest rate banks are charging each other between each other, right? If a bank lends money another bank, every day they're gonna be charging 2.116%, and if they are lending for 1 month, 2.07%, and if they are lending it for 1 year, right? It is very important to understand this also. So that's being said, just checking if I'm still right. Everything seems to be right. So I have been trading for a while, over half a decade, so it's very important. You need to understand inflation, CPI, GDPs, labor prices, personal consumption, the sentiment. So basically what I use volume and sentiment and a couple of my own tools which I developed myself, right? The other thing which is very interesting for me is the consumer confidence, right? Let's check out the consumer confidence. Those are the news which we gonna be analyzing and making our trading decision based off them. So if you're asking yourself, okay, what's the connection to news trading? Those are the information we'll be using it for news trading. The US consumer confidence inched up in July. So confidence went by 2 points in July to 97.2. Okay, from 95.2. So it has have increased If the consumer are confident, this means they're gonna spend more money. If they spend more money, it's gonna be more jobs, more services, more product to consume, and GDP gonna grow. And when we talk about GDP, okay, let's go to economic calendar over here. Where was it? Was it here? Okay, actual GDP was 3%. Consensus was 2.4, and they were forecasting it 2.5%. So we exceeded expectation by almost 0.5%, which is quite huge for expectation, right? So I would love to see GDP overall. The previous quarter was negative, which was crazy, right? And despite that, the S&P 500 just like boomed. Oh, actually not. Actually not. Because we saw that correction, right? The steepening correction. Let's go to the 4-hourly chart. On the left corner, you're gonna see always the charts, right? And we went all the way down, right? It was a huge correction, a huge mess. 21% correction over here. It is crazy to see such a corrections, right? So yeah, 3%, pretty much good. I'm pretty happy with it. So economy is growing. The Fed decision, okay. So one thing is very important also when it's coming to all this Fed decision making and so on. The Fed needs to report to the Congress, right? Tell them where they are and which data they have. You can look for June, for example, 2025. Click on PDF, and you see all the information, what they're forecasting. Let's zoom in. Okay. Summary: recent economic financial development, pending monetary policy. You come to the monetary policy because it's important for us, the Fed decision, and go to the monetary policy. You read about it, the rules, the current environment, and so on. Basically what the Fed is doing and how they are calculating all the first difference, the rules they have, the balanced approach rule, and so on, how they are calculating. I don't care how right now is being calculated. So it has remained the same forever since 1993, I think. And the policy limitation continued. The Federal Reserve, the different models they have artificial intelligence even. So one time Jerome said he's using ChatGPT to predict what the conference gonna ask him, and he prepare himself in upfront. And this one is also important because it not only gives you the prediction into the monetary policies, but also the GDP, unemployment rates, and so on, the PCE also. So let's zoom in. One thing is very important: no one is gonna know what's gonna happen in 10 years, 3 years, and so on. So don't rely too much on those data because it changes. So you can focus on the next 2 years, and the rest is, for me, is like nice to have, but not necessarily it's gonna be important, right? So GDP is gonna be growing between 1.4 to 1.6. So yeah, could happen. Unemployment rate, it should remain the same. Of course, Fed wants to be the unemployment remain the same. PCE inflation. So consumer inflation, so it's gonna be decreasing. Okay, only positive news. Core PCE, Federal Reserve funds rate, okay, should be decreasing. So yeah, so basically said they are looking for a brighter future over here, which is crazy, right? And I like it, but I dislike it too, because it's too positive, right? So the next thing is gonna be we're looking at, we have done this, the Federal Open Market Committee. Okay, this is one also interesting. The Federal Open Market Committee, it tells you, it's basically said, if Okay, it is basically said FOMC, the Federal Market Committee. If you didn't know, it is the FOMC, which everyone talks about, who's make the decision, who makes the announcements, and so on. And I think it is like divided between banks and consultants and so on, who are giving also their views. And I think there has 18 sections, 18 members who is like also deciding, including Jerome and so on, where the direction is gonna be. Majority of them have a master degree. I talked with a couple of them. They have a master degree. They are very normal people, so you would expect they are very serious type strict people. Nah, they are very normal. So the data always June is gonna be coming as soon Jerome speaks at 2 p.m. and 2:30 he speaks, right? It's always like this. So you're gonna be looking at the future dates, upcoming FOMC meetings, and because it's important. If here the reports, doesn't matter what the report is, the more important what Jerome say, okay, how he gonna react to the situation. And this news is much more important than the report itself. You need to understand that, otherwise you're gonna be mistakenly taking trades, which is unnecessary. If you're trading with also prop companies, right now is it the whole prop company past challenges, and YouTube has been in the trend. So you want to be careful. You don't want to, majority of the prop company don't like you to be trading in the news event. So 2 minutes before that, I recommend 15 minutes before a news event exit a trade, if you don't have like FTMO swing trading, right? A swing trading prop company. If you don't have a swing trading, exit it. If you are direct trading, another key metrics which one of my friends has shared with me is how many people how many trades, profitable traders on those prop companies are taking per day using S&P 500 future trading or Nasdaq, right? They have compared the profitable one versus not profitable one. The profitable one, we're trading only 2 to 3 trades per day, and the not profitable ones, we're trading 8 to 9 trades per day. So majority of them were losing in terms over trading, right? The psychology wasn't right. So that's very important to understand, and let's go deeper into it. So, and even also on TradingView, the platform right now which you see is TradingView. You can go to the left side, okay? I'm not sure if you can see it. I'm gonna zoom it out, okay? You can come to here to the left side. It's called calendar, and basically said is economic calendar. And when you click on the 3 power button, I would say over here, is saying over here, okay, the most important news worldwide, okay, is gonna be displayed over here. You're gonna click on here, and you're gonna see the Federal Reserve rate decision, right, is coming soon, and it's gonna give you the time, you country time, right? If you are not living in the US, this is gonna be in Austrian time, the Central European time, that the 8 p.m. The US time is gonna be the 2 p.m. We have 6-hour difference. Also the Canadian time, Toronto time is the same. Those are a couple of stock which is on my watch list. You can do a watch list and stuff, but right now this is less important. The more important is to figure out where the market is going, right? So we want to figure out what the market is doing and where it is going. So I have my own indicators and stuff, and basically say down below we have a mixture of money flow and myself developed signals in it, sloping, adding, enhancing it so we can understand it a much more easier ways. The other one is using the VWAP, volume weighted average prices, to give us sell and buy signals. The other one is using the moving averages to predict the direction if there are manipulations or not. So yeah, based on historical data, and right now is we are seeing clearly, we are in a 4-hour chart that the money was flowing out clearly, and right now is to start building a little bit up, right? So while we reached the peak, the money started peaking down on the 4-hourly. When we go to the daily, okay, is this kind of consolidating right through the whole phase. So I wouldn't take it that serious, but basically said S&P 500 can go overextended, right? So we can see it go much more higher if it's once. So it doesn't need to be looking at the cash flow, the money flow. So as far as I know, right now the institutions are behind the market and behind the whole upward movement, and which is very interesting for me, because usually those are the people who are reacting the first, to the markets and taking advantage from it. And this pump has been different. Why? They were scared about the decision of Trump, and also where is it going, where the whole tariffs is gonna be and where it's going. So we know that, and we talked about something very interesting, the volatility index, right? The VIX. The VIX is telling us where the market's gonna be in the short term, right? The blue lines, the red lines, what you see on my charts, basically those are limit orders. Those limit orders telling me, okay, where the interests are, where is still orders to be filled, okay? And those orders is like magnet for the price. The darker the color, the stronger is the magnet. That being said, okay, so I'm looking for higher. So last week, okay, we are on a daily. Last week we said it's gonna go lower and it's gonna give us the entry for the shorts, and right now we are looking for higher. And if it's going lower, which is gonna be more surprising, okay, which I don't expect it's gonna be going lower, why always look at the left side, okay? You don't need to look on the right side what's gonna happen into the future. You want to have a specific bias also on the left side, right? So we saw over here is this kinda has shown the reaction, right? Over here shown some reaction in the past and then went down. But how many times this happened, right? Is this like less likely? Over here is this people are more interested, right, in shorting the market, right? And what you can do also, you're gonna take this and open a second window, okay? Let's remove all the stuff over here and upside, okay? Okay, can we do this? No, it's not possible to have different colors. Where are we? Okay, we have done some cocktail over here. So yeah, let's go back to our strategy over here. So let's do S&P 500. Let's use the SPY, the index, and let's remove all indicator from it also. So what you want to do, okay, you're gonna highlight every area where you think it's gonna happen, right? Just compare it with the volatility index, right? So we know, okay, the date over here exactly is over here, right? So we know the price went down while over here was consolidating, right? The VIX. Okay, sorry. Let's zoom out. Still zoom out. Zoom in, zoom out, zoom in, zoom in. So okay, approximately over here. So it went up when we reached this level, slide down, consolidation, even a slight higher, okay, despite be going down, okay, couple of times consolidation. So what we call it, liquidity grab over here. We've done some liquidity grab in 20th of February, and the same over here, okay. Where is it? The second time we touched over here went a little bit down, a second liquidity grab before a sharper move. So we need to prepare ourselves for a slight higher prices before it goes down again, right? So this liquidity grab right now, maybe everyone is expecting that it's gonna go lower, and exactly what the market does: liquidate everyone, take the money. Market is like a casino. It's just like money making machine. It's like to collect the chips in the markets, right? And you want to be careful with it. You want to calculate your risk exactly. When it's coming to risk, there is a couple of risks: dynamic risk, static risk, preventive risk, reactive risk. You want to understand all those concepts. In the next live streams and so on, we will be talking about the subject if you ask in the chat, but otherwise just ask me in my Telegram. You can join my Telegram down below and ask me in Telegram and ask you a question over there, and I'm happy to help you out to figure out what is the risk management and how professional traders using and approaching risk management. I think many of you didn't hear about the Cali criteria also, right? I think which is very important also in terms of risk management. I use it sometimes, I don't use it sometimes, but as I said, I think for beginners it's very important and help them to manage their portfolio in much more easier way. And when I mean easy, it's just like not easy, it's gonna be simpler, but still you need to do the reps to it, right? So basically said, we're gonna be looking for higher prices before lower prices, right? So that's why we were expecting an ES over here. Let's go to the 30 minutes. Okay, that is gonna go potentially higher before it's going lower, right? And just watch that reaction. So what else is left? We want to analyze also Bitcoin, right? And Bitcoin has been quite a pain, right? Because it's kind of consolidation, trying to liquidate, trying not to liquidate, right? It's just like, okay, got rejected, trying to go lower to retest, right? Trying to retest this 117. And one thing is very important in trading: I see it over and over again. Don't copy my trades, guys and girls. Okay, don't copy my trade. My trades are not for copying. I share only my ideas, so you can either have also an idea, you can trade with it. You have also a direction, a bias maybe, but you don't need to copy my trades, because my trades are made for me and me only. Why I'm saying that? Because sometimes I exit trades without publicly saying that. Sometimes I enter trades without publicly saying that. Sometimes I compound, I de-risk, and all of that takes a lot of time in terms of social media management and so on. I don't have that time right now, the capability and the resources. Maybe in the future, where I automatically alert you, use a bot or something. But right now, don't copy my trades. If you copy it, be cautious. Ask always yourself and ask me the questions, so I can help you become a better conscious trader who has his own ideas, his own views, and so on. So what do we have else here? So clearly we're going down, the money is flowing out, it's going down. Let's go to the 2 hour 40 4 hours, sorry. Got rejected, looking for lower prices. So I basically said I'm looking for lower prices, doesn't matter what is done doing. I'm still looking for the lower prices since last week, right? We saw that correction from the last week where I talked about lower prices, and it was after that directly, I think a couple hours after that, it has just went down by Friday. And how much percentage was this? I didn't expect it's gonna go so much higher, but it still took me by surprise. It went so much higher. Yeah, it was 4% where we're talking about, and we were looking right now about again 113, right? So where the volume weighted average price is. So we will be looking for that area to be exact. Yeah, man, the 4 hourly is still. Let's check the 6 hourly. The 6 hourly is the money is flowing in on the 6 hourly. Let's check the daily. The daily is still money is flowing out. So the daily is liking our idea and is looking also for lower, right? And this has happened in the past always, right? We have made a new high, it needs some correction and so on. And Ethereum is the same. So I'm sure I am still in my short. I didn't get liquidated yet. Sorry, I didn't get stop loss. Liquidation is something else. Liquidation means you don't have enough capital in your portfolio, in your account balance on a broker account, and they just liquidate you out of your trade. They sell you position and say goodbye. So that being said, well, let's see what our guest is doing. So let's check if he's still alive. Arthur, are you here?
Yes, buddy, I'm still here. Nice introduction.
So Arthur is gonna be walking us through his point of view of the markets of S&P 500 and Bitcoin, and one of his also favorite lovely trades which he takes and has been pretty killing it on MSTR. And he will be also showcasing us where he see MSTR also. So right now I will be sharing his. Okay, do we see it? Okay, this is working. Let me close this one. Can I close this one? And I close. Can I make this one bigger? Yeah, pretty much. Okay, it's working. So I'm just setting up the administrative things. And Arthur, if you are ready, you can share your thoughts and your ideas with us.
Sounds good. Can you hear me and can you see my screen? Is everything running all right?
Everything's perfect.
Wonderful. Okay, well, great introduction. Well, you covered a lot of topics, quite in depth. We're obviously looking at price action today because today is going to be very influential with the FOMC and obviously with the data this week. This is going to be a recipe for volatility as we have a lot of market moving news, right? So I like to analyze the market in several different ways based on the time frame. And obviously, as Mo was talking about earlier, we were looking at volume profiles, inflows, as well as potential channels and trend lines where markets are moving in a certain direction. And we want to understand where the trend direction is. And we also want to use certain techniques that we are able to measure the expansion and contraction in the market, right? Because at the end of the day, the market is an expansive and contractive mechanism where, we can use tools such as Fibonacci and sometimes even, volume related tools to get an idea where the market can move and where the market can pivot. So I'm going to start out on obviously the SPY and the ES. So I'll go over to my SPY chart here and I'm going to kind of zoom out here on the daily just so we can get an idea of what exactly I'm looking at. Now I'm going to remove some drawings just so you guys can see our basic moving averages. So first things first, I want to use the 21 daily 21 EMA and get an idea of where is the trend actually heading and at what point can we see an invalidation of the uptrend. Well, it's very clear because we could have a breakdown of the trend.
Well, guys,
oops, sorry, let me just get rid of this. Like we did over here, we lost the 20, we lost the 20. These are warning signs. As of right now, we're still climbing above this 21 daily EMA. And so perhaps we have a little bit more upside. But I would like to use the Elliott Wave forecasting tool, which is my preferred way of analyzing the market, as well as the fixed range tool to give us an idea of where our key levels in terms of volume sit in the market. So as Mo talked about earlier, I have my fixed range profile tool here when we had our distribution before the crazy Trump sell-off. Now, You guys know that, I think we covered this before, this was an ABC, very clear ABC correction. This is a three-wave corrective structure. And an Elliott wave, the theory suggests that whenever you have a three-wave structure, it retraces in the original direction of the trend. So because our overall long-term trend is bullish, this correction is a catalyst for us to continue moving higher based on the pattern that's being presented to us. Obviously, the pattern is not the only thing. There's other, important indicators, but we're visually able to see that this is a corrective structure, and so we should assume that it will be retraced, which it has already done. Now, we do have some key levels because we did get a big breakout here where our POC, our most traded zone, being around 597. You can even gauge it up to 600 or 6,000 on SPY. I think that's going to be a pretty key zone for us to be looking at. And I like to measure these breakouts with this breakout pullback zone. And part of the reason why I'm paying attention to the zone is because we do have a clear gap here on the SPY, which likely will probably get filled in one of two ways. Either we come back down, test the top of the gap and continue, or we can come down and fill the gap, touch this breakout pullback zone, touch this POC, which is our most traded volume. We know that the most traded volume sits in this range. And so perhaps we'll come back and then kind of take off from there. Now, you got to be mindful because we do have a projection of between 5-6% at the moment. But I think that we might actually have some room to go a little bit higher based on Elliott wave, and I will show you why. So if I come over onto the ES and I set my overall drawings over here, I'm just going to get rid of that fixed range because we already understand what's going on here. I want you guys to notice, and I'm also going to get rid of the Lux Algo because we already understand where our volumes are sitting in the market. I want you guys to see and understand what we're looking at here from a perspective of Elliott wave. So very clearly, we can see that we had our B pivot put in here, and this was our sharp drawdown following the rotation higher. You can also see how our B pivot was actually put in at, where would you think that it would be put in? Well, if I pull the fixed range from this entire range, let me just get over to the consolidation range. Draw this out here. You can see that our B pivot actually came in right at the previous value area, right? And so that was the significant drop. Reversal, and look at where we're bouncing here, which is the reclaim of this value area right over here. That's where we reclaim the zone and then continue higher. Now, because we have a clear ABC correction, usually when you have these Elliott wave corrections ending, you look for an impulse wave out of it, right? Because you want to make sure, you want to get an idea of whether or not the end of the correction is here. By that, we want to see a 5-wave structure. And I've kind of detailed that for you here to show you guys that we do have a very clear 5-wave structure. We have a move up in A, a pullback in B, or sorry, in 2, and then we continue higher and higher and higher. Ultimately, we want to put in a 5th wave. Now, each one of these waves actually consists of 5 subwaves. And you can see that this last wave that I've illustrated here, this 5th wave, I'm looking for this 5-wave structure to the upside. And using trend-based Fibonacci's, we can actually project based on the expansion in the market where our final target could be. And by doing that, you take the low of 1, okay, to the high of 3, and to the low of 4, and that will give us our overall targets here based on our trend-based Fibonacci, where our 5th wave could end. And the common target for our 5th wave is the 0.618, which I have right here. And that is approximately at 64.70 on the futures, okay? So that's one way of calculating and projecting. We also have another way that we can use the overall Fibonacci tool from high to low. So I can go ahead and take my Fib retracement from the high of this move to the low of our C, which was the end of our corrective wave. And then I'd like to use several different waves, one being the 1.618, But more recently, I started using the 1.272, which is a very interesting Fibonacci that I've found to be quite reliable in terms of where a top pivot can come in, and it's been quite accurate, so I started using a little bit more. And you'll see that we're given two different values here. One we're given at 65.21, and then another one at 69.77, almost at 7,000, right? And essentially what this is looking at is it's looking at the relationship between what happened in this wave, which was the compression phase, and now the expansion phase. And generally speaking, these Fibonacci zones can be seen as being respected, right? So what I'd like to focus on is this potential fifth wave. I'm going to cut it to the point here because I do think that we will be due for a correction. I think that it will be tough to find the exact moment, but we will be able to use things like our EMAs and particularly the 20 daily, which I want to see a breakdown or a confirmation for a short trade. Something like this would be really nice, where we have the price break through this 21, back test it, and this is where you'd be looking for your short trades, perhaps to bring it back down to the POC. NASDAQ, same thing. You can clearly see the range on the NASDAQ much more clear. And I'm just going to show you guys, in real time how you can see this, where if I was to take my trend-based Fibonacci, I have an alert here, I'm just going to move that over, where if you take your trend-based Fibonacci tool and you take it from the low of 1 to the high of 3 to the pivot of 4, you can see where that 0.618 comes in for a fifth wave. So that fifth wave extension is at around 23,940 on NASDAQ, maybe around 2,400. We get that fifth wave, ultimate blow off top, we get the full euphoria, and then we perhaps come back down and maybe come at the top of the value area where we had here. More importantly, I'm going to be paying attention to SPY. I think SPY will be the bread and butter for us here, and we'll be able to get an idea of where the market really wants to pivot. And so I think that pivot zone is probably going to be in and around 600, give or take, between 595 and 600. I think that's ultimately where we'll end up. And if we do get that pivot from the 645 top that I have based on the Fibonacci for the wave 5, I'd like to see a drop between 6 and 7%. That would line up really, really nicely. The higher we go, keep in mind, the higher we go, these values will change, right? So we're going to have to pull the value of this drawdown from the top, and that could be 8%, that could be 9%, 10%. We don't really know until we get this confirmation here. And by confirmation, again, you can see how the 21 daily is being respected here. As soon as we get that breakdown, that's what I'll be looking for the short, and that's what we'll be looking for, take profit zones and hedging as well, right? So that's what I think on ES and NQ. So I think we have a little bit higher to go. We do have some volatility coming into the market today and into Friday. So we may just get some kind of move that could kind of give us a range, and then ultimately, a nice kind of downside move. For Bitcoin, we've been looking at this Elliott wave correction. Personally, I have been very much so interested in Elliott waves here because I think that it gives me an idea of where the market can move based on the patterns that it's making. And we can use our Fibonacci's to get an idea of where the market can pivot. And so this is, if you actually visit the Elliott wave website, this is what you would call a combination correction, okay? And what a combination correction is one thing that I learned about Elliott wave is that whenever you have overlapping structures like we do here, chop, 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 this is generally defined as corrective price action. So what does that mean, corrective, right? Corrective price action means that there's no clear direction and that there could be often a range or a structure where we would refer to it as a pit, a pullback in time, where price might not necessarily need to drop, but what it does is creates a pullback in time to relieve some pressure from the market by trading sideways. And so Ralph Nelson Elliott identified two major types of Elliott wave combination corrections. One is a WXY, which ends in a triangle. And the last triangle formation is where you ultimately get all the pressure kind of build up in the market and then release, generally speaking, in the upwards direction. Obviously, if it breaks down and takes these low, then we have more of a distribution pattern. This is not a corrective structure at that point. It would become more of a distribution range. And what does that mean? Is that likely we'll probably come by and take the lows, right? So you'll see the distribution. Another type of pattern that Elliott does talk about is similar to the pattern that you're seeing here, but it favors the distribution side of the breakdown where you get another wave down. And so you have almost like a 3 drive. So you have a 1, 2, 3, and that ultimately ends your correction. So right now, what I'm looking for is, I'm curious whether or not we are at this ending point of this corrective structure. And I have a few reasons to believe so. So we'll start with the first, where we have this big range here. It's a parallel channel, as you guys can see. And after putting in our pivot here, pivot high, we came down and we actually took the low of the range here. And how do you find the low of the range? Just find the local pivot where we had this formation start. Obviously, you can see this very impulsive move here. You know, impulsive moves tend to travel in a signal direction. And so you can see the last time we bounced was right around here before we started trading in a range. And so I look for the range low. The nice thing about this is that with Elliott wave, we also have confluence for a WXY, where the first wave is an A, B, C structure. And the common target is either the 618 or the 1-to-1. And in bullish markets, very bullish markets, the market tends to bounce at this 0.618 pivot. In a market that's more neutral, perhaps you'd see it come to the 1-to-1 extension, which would be somewhere down here, and then maybe bounce. But the hint that we have here is that we are bouncing not only at the range low, but also at the 0.618, giving me an idea that potentially this could be a little bit more bullish than bearish. Now, once we get this ABC pattern out of the way, which we call the W, which was the original corrective structure, we then move in to create the X, which is the start of the triangle, and the consolidation in the triangle, which ultimately forms the Y, and that's what we call a WXY correction. So essentially, WXY correction is a combination correction where you have multiple corrective structures, and in this case, you have 3 different corrective structures. You have your A, B, C, you have your WXY, and you have inside, you have your triangle. Okay, so it's a combination correction. If this is the reality, then we should know exactly what's happening very soon. We also use our fixed range to get an idea of where volume sits in the market, of course, so we can pull the whole fixed range for this. And you can see how we're kind of trading within this fair value range. We also, interestingly enough, have our triangle within this exact range, right? So that gives us an idea that, you know, if price wants to break out, it should preferably break out of the triangle and then break out of the range. And that would give us a little bit more confluence that, you know, perhaps we have something like this, where we get this value area high, flip into support, and then continue higher. That would be really, really nice. Conversely, we also have the potential that we could break down, right, from this zone. These are kind of zones which I would like to pay attention to, around 119, 500, give or say, you know, more or less up into this high. So we'll see what happens. Right now, I'm looking at this combination correction. You know, we're seeing that the dollar is gaining strength, but we do have some supply zones here, which might act as resistance, right? So whenever we're in a sharp downtrend, you want to be careful of longing. You want to wait for a little more signs of confirmation, because we could just be doing what we did here, right? You guys can see that we have a sharp move down, nice U-shaped recovery, just to get smacked right back down, right? And so yes, we do have a double bottom forming here, but as we come into these resistance zones, we could just do something like that. And part of the reason why I believe that that's still a probability is because we also have a larger ABC correction that I believe is playing out here. And part of the reason why is that we have this 618 Fibonacci. So if you pull the Fibonacci from the high to the low, we are retracing at the 618 Fibonacci, which is generally a trend continuation zone. And so that suggests to me that we do have a potential ABC here. Now, if you guys noticed our 1-to-1 is at 94, we can also pull in the 0.618. And in that case, you can see we tried to kind of get a bounce in and around this zone, didn't quite get much. And we do have that now as resistance with this confluence with this order block or this resistance zone, whatever you want to call it, when we had this very, very strong sell-off. And I pull it on the 4 hours so you guys can see it a little bit more clear. You can see we gapped up and then just completely just sold off. So looking at these zones, going to be very interesting. And yeah, I mean, that's kind of what I'm looking at now. I do advise caution in the markets. Personally, I would not be buying too much stocks at these prices. I would be very much so aware that, you know, hedging will be a reality, perhaps, if we get the pivots that we are looking for. And we'd also look at the Mag 7, you know, for things like Tesla. We are giving, or at least getting, kind of different types of mixed signals on this stock, and as well as other mixed signals on other stocks. But, you know, stocks like Tesla are still quite undervalued in relative to other stocks because they haven't really quite hit their all-time highs, and let alone come near their all-time highs, right? I mean, we're looking at a difference of 30+% from the all-time high. And we are seeing what could be a potential continuation here after this 5-wave impulse. So you guys can see 1, 2, 3, 4, 5 into a corrective structure, which is an ABCDE triangle. And if we do get the breakout, I would expect it to happen here because we're reclaiming this downtrend anchored VWAP, which is essentially an average weighted tool showing us that, hey, you know, this price range we have to pay attention to because this is the average price of this downtrend. So if sellers want to hold it down, they want to trade price below. And you guys can see that, you know, buyers are definitely fighting here, and as price is kind of rotating within this range, eventually ranges that rotate like this, they'd like to break up or down in a certain direction, and we won't really know when until we get this breakout of this triangle. So whether it breaks up or down, we should know relatively soon. I do have a feeling that this might actually break to the upside, but only time will tell. Another big stock that I'm looking at is Circle. I'm genuinely very interested in the potential future of this company. I do think that we might have some kind of revolutionary technology, not only in terms of the blockchain technology, but in the financial space, because the regulation can change with the Trump administration, and they're heavily supporting these new types of stablecoin technologies. And the primary issuer could simply be CBDC, which is an American company, Circle. I have actually been tracking this harmonic pattern that I found quite interesting. And part of the reason why I found it interesting was because not only do these values line up perfectly within this pattern, but we're actually getting the pivot at the exact zone of this 886. So typically speaking, with this type of harmonic, mind you, this is technically a bearish harmonic, meaning that once it hits its target, it tends to fall. But until then, we do still have a move of about 100%. So if that does mature, I have these lines drawn out here based on the Fib time zone. And this Fib time is basically taken from our major pivots, A and C. And so if we do get that, I mean, it could happen in the middle of August, mid to late August. That could very well be a possibility. And one thing that's also interesting is that, you know, we love using the fixed range here. You guys can see our fixed range lines up perfectly at the value area low, where we come in for this C pivot and potentially find support. As you can see, we did here on this A pivot as well. You'll notice that when we did have the failed breakout here for the B, we did kind of break out above the value zone, but within the same day we came back down. So it shows that there's quite a bit of strength here from the sellers. And if we do get above this zone, then I do see that squeeze potentially forming. But overall, you can kind of see here how, you know, our value area, our volume profile, our anchored VWAPs, you know, mainly we do need to reclaim this anchored VWAP from the low to really push higher, because right now it's creating some resistance. But I'm mostly interested in this harmonic right now because the harmonic values are lining up. And so I'd like to see that move higher. On Ethereum, same thing. We're looking at our 5-wave impulse. I do have an extended 5th wave, potentially up at 5,000. I don't know if we're going to get that high. That is a little bit of an exciting target. But nonetheless, it's more or less what the Elliott wave is showing here. So if we do get up there, amazing. I think that firstly, I would love to see this all-time high swept. because if we take a look at the Fibonacci ratios, and I just want to put on one of the most common targets for strength, which is the 886 Fibonacci. So if we take the 886 Fibonacci, generally speaking, when price hits into the 886, the probabilities to take the 1-to-1 or the high of the entire move retraces is quite high. So I'd like to at least see this, and maybe we'll get some kind of pullback afterwards, but this is kind of the zone I'm paying attention to. If we just blast through here, then yeah, I do see the argument for Ethereum to go to 5,000. Just based on Elliott wave, could be a possibility. I'm not really kind of looking at that as a base case, let's say. But as we get new data, we have to adjust our bias, right? So if we just get this thing to blast off through here, then you might be thinking, okay, well, where could it go next? Maybe it could just do something like that, right? So we'll see. Only time will tell, and we'll see how the market progresses. But I think that's all I really got for you guys here for today. I'll give it back to Mo. I'm sure Mo wants to go over a few more things here before we get the FOMC coming in about 50 minutes. So Mo, I'll pass it back to you.
Thank you very much, Arthur, for your understandable way of explaining it, and your view is appreciated, and this is very important. So basically said Arthur using his Fibonacci levels and volume again to predict the market direction. Nothing hocus pocus, not a wizard. He's using very simple tools to predict the market, and I think that is the very key of the trading. Many people think you need very advanced tool to be progressing in the market. It is only about a little bit edge. And to figure out an edge in the market, you need to spend a lot of time in the market, observing and being in the ditches, and then you start combining those edges, right? Because you have gone through a lot of tools and starting building your own tools with it, right? Building and combining and testing all those competency you need in trading. You need to be competent of understanding what the problem is and how to solve it, right? And sticking long enough and be resilient with it long enough so you see the results. Otherwise, many people switch a lot strategies, okay, and they think they are lacking strategy. And no, it is very frustrating when it's coming to trading. You don't know what is happening in the future, the pain of the unknown, and always your mind start building those images, right? In your mind, is it a good future, a bad future, and based on your past experience, you lost money. Is it gonna be again you're losing money, you're in a bad situation? And every that, right, is very difficult, of course. Trading it is not easy, but at the same time it is easy. You know, you need to put the hours in it and build your own personality. I think the easiest path to building your own personality and becoming a more better human being and more conscious about yourself, who you are, what you do. And I think the trading is the fastest way. Otherwise, if you don't figure that out, more likely you're gonna lose money. So yeah. So the next thing we want to watch is the sentiments. What's going on in the market, right? We want to watch the sentiment. Okay, we have the AAII investor sentiment survey. Basically, they have a couple of investors. They ask them in a weekly basis where they see the market is going in the next 6 months, right? Where the US stock market is going in the next 6 months. And in the average, they have been 37.5 bullish, 31% of them 0.5 were neutral, and 31% were bearish in average historically. And today we stand at approximately a little bit less than the average bullish and more into the bearish side, right? So people are expecting, when we look in the last 4 weeks, are expecting some correction, right? And despite that, which was surprisingly, despite the increase of uncertainty in the market, the price still pushed higher. Why? I'm gonna explain it for you a very simple way. Okay, it is easier than you think. When there is no volume in the market, when there is less volume, we work with supply and demand. The price is being set based on supply and demand. So when it is less supply and less demand, it only needs one side a little bit more to push the price higher, right? And in major times, July, 1st of July is June, May. In those times, the market is like more volume in it. September, October, November, December, those are again more volume in it. I think July, August, it is like less tradable times. But of course, it could be different. This year could be different. Historical bias doesn't mean it's gonna be the same. Market often rhymes, it doesn't repeat itself. But another thing is about the sentiment. They always ask them a specific question, such as, how concerned are you about the impact of tariffs will have second half of economic growth? So basically said, how people are concerned. Many of them say they will slow the US economy by a modest amount. So they are pretty concerned about the tariffs, the people out there, the investors. They will slow the US economy growth by a significant amount. 22% of them said yes. And so in average, they said it's going to be having a bad impact on the economy, right? And only 6.6 of them said it's going to boost the economy. So this is clearly that people are not stupid over here. This is seeing the tariffs as an opportunity which could impact the economy in more negative way. And some people are saying it's going to be positive, and some people are going to saying it's negative.